Here on the Transparent FX Academy, every day I share my educational market breakdowns, showing you how you can be looking to analyze the market both from a technical and in order flow perspective to identify the best trading opportunities in the market. So without further ado, let's jump straight to the charts and see where we can be looking for the next potential opportunity. In today's video, I want to speak about eurjpy. Now, why do I want to speak about eurjpy? Because at the moment, we have quite interesting price action and structure for a potential opportunity. So as usual, I will be performing a complete multi-time frame analysis first from a technical and then from in order flow perspective by checking the commitment of traders, which is basically what hedge funds, so the non-commercials in the market are doing. And by the end of the video, by using the combination of our technical and order flow analysis, we will try to understand where we have the highest probabilities for a potential trading opportunity on the pair. And as usual, I will keep this top-down analysis as educational as possible. Now, starting here from the monthly time frame, what do we have? Now, here in the monthly, we have a market which has just provided a very strong impulse to the upside. Now, the bullish momentum here that we have is quite clear. However, we can also look left, and if we look left, what we can see is that the market at the moment has just broken above a quite strong structure level, actually historical structure here for eurojpy. In fact, this zone was acting as a very strong resistance and supply here, preceding this move to the downside, again here acting as resistance and supply, and the market has just broken above the level, meaning that all this previous resistance is now turned support here, which means that at the moment the market is actually testing a quite strong monthly demand and support area, which the market has a high probability of rejecting to the upside. So on the monthly, we are quite overextended to the upside, but since we are testing strong support and demand, there is the possibility to see a rejection to the upside. Going down on the weekly time frame, what do we have? Now, here in the weekly, we can see that in all this impulse to the upside, there is one candle which is not related to the move, which is exactly this red candle here. Now, when you have a strong impulse to the upside, there is one candle not related to the move. It means that during this strong bullish momentum, the market has actually reacted to this area, meaning that there is interest in this level. And since the market has now broken this level to the upside, since it was acting as resistance here, as you know, in the market, previous resistance, once it is broken to the upside, is turned support. So at the moment, all this area here is actually strong support, meaning that not only on the monthly we're testing support, but also here on the weekly we're testing support and demand. And once again, we can expect the market to provide our rejection to the upside. Just a quick thing, make sure that you like, subscribe, and also let me know in the comments the topic for the next video. Going down on the daily time frame, what do we see? Now here on the daily, we have quite good confirmations. In fact, we consider the market has just provided also here on the daily time frame a nice M pattern. Now, in general, when you see the market provide an M pattern, after that, you expect the market to provide a move to the upside to complete the pattern itself at the previous support turned resistance. So here in the daily time frame, we expect the market to provide a nice move to the upside to complete the pattern at this previous support turned resistance. Now, if we go and see what we have from a COT perspective, so commitment of traders, which is basically what the non-commercials in the market are doing, which are the biggest speculators, what do we see? Now, here in the euro, we can see that with the last report, hedge funds have added 1.2k long positions and closed 4k short positions. So they're adding longs, decreasing shorts, and at the same time, we can see that they actually have been increasing the net positions for quite some time. In fact, we went from having 66k net positions all the way up to having 109k net positions. So the euro is actually getting quite strong. And if we go and see what we have on the JPY, we can see that lately net positions have been decreasing. In fact, we went from having actually here 50k net positions, so a positive net positioning with 63k longs and only 13k shorts, so way more longs than shorts, all the way down to having minus 47k net positions with way more shorts than longs, 76k shorts and 29k longs. So the complete opposite, meaning that the JPY is getting very weak and the euro is getting strong. Now, if you remember, we have already seen here that monthly, weekly, and daily are all indicating for a potential move to the upside. And we have just seen also from a COT perspective that we have a strong euro and weak JPY. And obviously, if you have strong euro and weak JPY, you expect the market to provide a move to the upside, meaning that both from a technical and in order flow perspective, we can expect the market here to provide a potential move to the upside. So how we will be approaching this potential longing opportunity with students. Now, as usual, we will be reactive and not predictive. Monthly, weekly, and daily, those are the best time frames from a directional perspective. But when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, with students, what we will be doing is monitoring price action from a 4-hour perspective and lower during this move to the downside. And we will be waiting for the market to shift from a bearish intraday market as we have right now to a bullish intraday market. And as soon as the market will shift from an intraday bearish to an intraday bullish market, at that point, we will be adding eurojpy to our watch list. And as soon as the market will provide to us one of our valid entries, at that point, we will be taking a nice long with a good risk to reward and good probability for a nice move to the upside and for the market to complete this M pattern at least at this previous support term resistance, which is the neckline of the M pattern itself. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free analysis education and updates for all of you. You can also go and check out the mentorship program. The link is in the description. It's a very complete program. First, you learn all the rules of my rule-based strategies. Then you trade them with me every day. I give you a new daily market breakdown showing you how to apply the strategies with the entries, stops, and take profits. And you also can ask me questions every single day and get the answer the same day in the Q&A session. So it's a very complete program. I really suggest that you go and check it out. The link is in the description, and I will see you in my next video.